What's up, guys? Welcome to Top Growth Financial. Today, I'm going to be talking about Disney stock, ticker DIS. And in the last month, their stock price has been down about 15%. So, is now a good buying opportunity, or is it time to panic on Disney? Stay tuned to find out. Alright, so like I said, Disney's stock price is down about 15% in the last month. We're going to go ahead and take a look at their chart so you can see for yourself. Alright, so this is the 3-month chart. You can see their current stock price is $147.31, and that's down about 18.5% in the past 3 months. But as we can see, most of that decline has been within the last month. So before that sharp decline, we see a little bit of a peak, and that was around $176. So we're down about $30 from that. All right, so why is Disney's stock price down so much, and should we be worried? Well, the answer to that is no. I'm not very concerned about this decline in Disney's stock price, and I'm going to tell you why. So most notably, they missed on their fourth quarter expectations on both their earnings per share and their revenue. So their expected earnings per share for quarter 4 were 44 cents per share, turned out to be 37 cents. Not a big miss, but again, missed their expectations. So even though they missed on their expectations, they still reported great numbers. In fact, they brought in $18.5 billion of revenue in just the fourth quarter alone this year. And by the way, when I say fourth quarter, with Disney, their fiscal year ends on September 30th. So their fourth quarter is what most other companies' third quarter would be. So like I said, $18.5 billion in revenue in the fourth quarter alone is a great number. In fact, that's up 26% from last year. Last year, their revenues did take a bit of a hit. Their theme parks actually closed down in March. Some of them didn't open back up until August and September. So their revenues did take a hit last year, but they're recovering from that, like I said, up 26% from last year. So that $18.5 billion in revenue, still a great number. It just missed expectations by a little bit. And the good news is all of their parks are back open now. And in fact, their parks brought in alone $5.45 billion in revenue for that fourth quarter. So they play a big role in Disney's revenue. Another figure I'd like to mention is their operating cash flow, and that was $2.6 billion this quarter, which was up 58% from last year. So overall, they actually have a pretty strong balance sheet right now. Again, they just missed on a couple numbers. I think that's the main reason that stock price has been driven down. So next I want to talk about the media and entertainment division of Disney, and that is up 9% from last year. So not nearly as big of a jump as their revenue and their operating cash flow, but that section didn't take as big of a hit due to COVID. So this is the Disney Plus and their streaming networks and even their TV channels, including ABC. So some of their movie projects and even their TV show projects got delayed last year due to COVID, but it didn't really have a very significant impact. One of the most notable projects for the media and entertainment division with Disney is Disney Plus. They currently have 118 million subscribers. That is a great number, especially after considering it took them only 2 years to get that. But that is another number that missed expectations by just a little bit. Management said that they expected the Disney Plus number of subscribers to be about 125 million by this time. So again, missed it by a little bit. I don't think that is really played a factor into what drove the stock price down. But again, that just seems to be a recurring theme here, missing by just a little bit. So just to show you how impressive that 118 million subscribers is in just 2 years, we're going to compare it to Netflix. So Netflix currently has 209 million subscribers, which is very impressive. But it took Disney 2 years to get to 118 million subscribers. That took Netflix 8 years to achieve. So Disney Plus is growing at a rapid rate, and management has said now that they expect the amount of Disney Plus subscribers to nearly double by 2024. They said they're expecting around 230 million subscribers, which is more than what Netflix has right now. And lastly, so after looking at their long-term valuation metrics, I think that we can expect Disney's earnings to grow by about 25% per year for the next few years. So to sum it all up, no, I am not concerned about Disney's stock price falling about 15% in the last month. The biggest reason for that decline in stock price was that they missed their fourth quarter expectations in both earnings per share and revenue. Added to the fact that there is still some fear of COVID. I know there's a new variant that is out now that a lot of people are talking about. I don't think that part played nearly as big of a factor as the fourth quarter numbers did. But overall, I'm not concerned about their stock price. They still have a very strong balance sheet. Their numbers are great. They just missed expectations by a little bit. I think it's actually absurd that their stock price fell that hard just by missing their fourth quarter expectations by a little bit. So, in conclusion, I think that Disney is both a great short-term and long-term investment. Thank you for watching.